Hiya, Bobby. Just let me know if you can hear me, mate. Got my coffee. I'm all ready to go. Okie dokie. A few more stragglers in, no worries. All right, let's just get started then, mate, and we'll see who comes in soon. All right, welcome to Trade Setup. It's the overnight markets we're taking a look at now. So anyone that's new, you could join us at Twitter, or you could follow us. What's probably the best is following us on TradingView, which you've got here. Bobby's already signed up to it. And it's good he's doing a few likes there, mate. That's great. Much appreciated. So we're just posting a few ideas on TradingView, using it as another forum just to, I guess, grow the brand. So jump on there. If you search for us, it's I think it's trade capital T underscore setup capital S. If you search that in TradingView, which let me just show you while we're at it, for anyone that's new, is so when you get to this page, your home page, you're logged in, just search up here, go down to people and just search trade setup. This one here, trade underscore setup. So yeah, that's us there, and you'll see some bits and pieces we posted. Had a good night last night, actually. About 4 posts, and I think one went gangbusters, one went in our favour, or 2 went in our favour, and 1 did nothing. So we're looking at overnight. It looks to be a bit of squaring up, a bit of a rundown from overnight. US was up. US was down. So they pretty much seemed like they're squaring up ahead of talks. I think there's, I wouldn't say low-level talks, but there's talks that have just begun now. I think with sort of the lower level ministers or whatever you call them, and then apparently Thursday, Friday is sort of the higher level talks with your key players between the US and China. So I think there's news out last night about China. You know, they're not going to get just a broad. They're not going to come to terms with a broad deal. They're more against that. Well, they're going more and more against just having your trade talks and come to some sort of broad arrangement just to, I guess, appease Trump and appease the market. But I think so. There's news out last night which sort of caused a bit of a sell-off. But you've also got probably, I think that sell-off was more due to do with risk, just people taking risk off the table. If you bought it the last few days on the bounce after the big sell-off, you went bargain hunting, you jumped in. I think it's more just squaring up as some some long positions on the equity markets, and you can see it across the board. Similar things were happening on the Aussie dollar. So if you look at the Aussie dollar, so that's been long. It's been rallying off these lows, you know, pressing higher. It's got up to that 67.80 mark, started falling apart. This is one we actually said as a potential sell last night, and it did come off. So that you'd say is just squaring up. So anything negative towards a trade deal or that not coming to some sort of arrangement is going to hurt the Aussie dollar. And I think lately it's been, okay, you've been getting these sort of short positions. The news coming through was quite good, buoyant of Aussie dollar. So probably that would have been just a few, you know, longer term shorts that are just closing out, and it's a bit of a squeeze back up. So these longs now have just probably squared up. So anyone that sort of took that opportunity to buy it off that buy for a bounce off the key bid zone is probably just squared up positions coming into the trade talks, because you never know what's going to happen. I mean, Trump, more than likely, it's going to go along the same patterns as before. China don't want to make a deal. They want this. US want that. They go loggerheads, come out, both increase the tariffs, and then we've got a problem again. Maybe that's not likely that they're going to come out and Trump's going to get in a bit of a huff and go like, hey, that's it, we're raising tariffs again. But you never know with him. He's quite volatile, to be honest. I mean, I think what happened, what was it? I know he pulled troops out of, now I can't remember where from, but Turkey, and then warned Turkey not to get involved. And of course they went and jumped in and started skirmishes. So that's, and I think that was against the EU's without any EU consultation. So he just does things in a wing and a prayer, which always can catch the market off guard. Excuse me. So that was the euro. Sorry, the Aussie. The euro was more choppy. There's nothing really built up in the way of longs or shorts. It's been quite whippy, and they've got their own issues with growth, economic growth, and potential looking towards further stimulus anyway. Now the thing is, if the US are going to cut rates and they go through a bit of a rate cutting cycle, that's going to hurt the euro because a lot of the flows from the euro going into US because of the differential, the interest rate differential. Now, if that gap narrows, there's going to be a lot of flow out of the US, so selling US potentially and buying euro. So lately it's been, they're talking up, they did a rate cut and they're not talking up anymore. So it's been leaving it open to buying into the US dollar and selling into euro because the euro is expected to go down, rate cut more, further, or further rate cuts. Having problems with my English today. But further rate cuts, which means that differential is going to go up, which makes the US dollar more attractive. So now there's potential that to turn. And you can see Trump's really badgering the Fed Reserve to cut rates. He wants a substantial rate cut. So that's what he's talking up. And he's again pressuring the market. And he was talk of it last night. He came out on Twitter, his favorite forum, jumped on Twitter and was talking up substantial rate cuts from the Fed Reserve, trying to put them under pressure, which to me was sort of saying that he doesn't expect some sort of deal anyway. So we might get the fact that we get to the end of the week, there's no deal and the markets don't take it kindly and then sell off again. Because now they'll be looking towards, earnings is coming up, was it next week? I think kick off next week with the banks, and they're expected to be down. And so it'll be interesting to see what sort of impact the trade wars had on earnings in the US. And if they don't come out too positive, then that could trigger a sell-off on its own. And if the outlook is not positive, and you come to the fact that Trump hasn't made, they haven't come to some sort of deal by the end of the week, and trying to go away in a bit of a huff, and they're prolonging it more. There's no deal. Then going into earnings, you got that headwind on the back as well. It may not bode well for future earnings either. And if you get earnings coming down, reducing, which they do expect, and it could be factored in, which I don't think so with these markets bouncing quite hard. It could mean there's more selling to come into the overall markets, but we just have to wait and see what sort of news flow come through. So the pound was choppy. We didn't really look at that. The yen, looking for that bounce. So that yen's popped up off the support. We marked up that yesterday, sent that alert out. So that went quite well. And again, that to me is just more squaring up of shorts. The shorts have been building up. Coming into the high level trade talks, they're just squaring up positions. So I think a lot of the action on a lot of things last night was just more squaring up. Equities, if you're long equities, you probably take some risk off, because if they come out with no trade deal, like we said, they go and crack the poos and raise tariffs, then you've got issues on the downside. So you'd rather be screwing up some longs coming into the unknown. You can always re-establish longs if you have to, not a problem, or establish some shorts. Gold did push lower. So we'll look at gold. No, that's not gold, is it? Oh, that one. So this is gold, but to me, we're probably going to go out to an hourly chart. This is that zone that kept providing some support, and we got this push down into that zone. So that wasn't a good sign. Once you get that leg down, you got this sort of contraction higher, lower high, extended the same move, lower, got down to 1465 before it bounced. So we've got this bounce here. Now, what I'm looking at through this zone is whether or not there's going to be some buyers hold it up. We could get, I drew this up here expecting a bounce. I didn't expect it to go all the way back up here. But the thing is, what we've done, there's only really a minor zone. It took out, that was a fairly, I guess, it's really a minor offer zone. So once the market pressed down, there was offers coming in there for that continuation lower through that support around 1500, 1490, pressed through there, bounced straight back, and they've just cleaned out that zone. So whether they've cleaned out that in advance of another bounce, another major move up, and this could all be in line with what happens with the trade talks. Trade talks play out, boom, they play out negatively, and there's, it's just an extended trade war, which means more pressure on the US, the economy, all that sort of stuff. Then you would expect the gold to bounce. You expect some sort of bids to start flowing in here. But we'll see if that starts to get supported around 15 or even a touch below. There is potential this move is going to extend, and this is your major correction, 1, 2 lower before we go. We could potentially just go a lot higher, and that would open up for. Well, let's just have a look. Yeah, so you can see this move up here. We've just corrected that now. That little flush out that we just described then. That 1, 2 moves down. So this could be the start, basing out around 15 or give or take, but above that 1465 zone. basing out above that, start to build some bids again, and then launch higher. We'll have to see, but this is a massive bid zone. Once it cleared through, was it 1370, say, this zone, this offer zone, it's cleared through there off some higher lows. That was quite a long time too, since 2016, this low. It's built quite a solid base, which leads me to believe it could go a lot higher, which could be looking up towards 1790, the previous highs. We'll have to see. That's a big if at the moment, and that's probably a long-term play. But that's what I'd be looking at. And that's, again, a lot of it's just news-based and based around what's going to happen between trade. I mean, if they come out with a deal and both are happy, you expect the market to rally because no more rate, well, maybe. Because everyone, I think, rate cuts, the idea of rate cuts is buoying the market. Now, if there's potentially no rate cuts because they're looking at there's a deal, which means the pressure on the economy is eased, inflation's okay, no rate cuts, it still could be a bit of a sell-off or readjustment. People are just going to have to start. But I think the first reaction will be higher because it'll be a positive effect. The headwinds for the economy is gone, and the economy's still growing. They're still doing okay compared to other nations, around Europe and Asia and stuff. They're still doing a lot better in the US. So that's it. Let's just go over to the Aussie now. So we're expecting the market to open up about 25 points. So we did actually hold up okay, and I've closed it down, haven't I? Give me a minute. Let me just open up the SPY chart. I've actually, my computer played funny buggers with me this morning and turned off. But I'll get up this and show you the trades also. So this is what I was looking at, what I traded yesterday on the short side, but didn't get the long, which was always the better one, isn't it? Get the small one and miss out on the bigger move. So here's the SPY. That's just opening up now. So it's pressing down. It's pressing down, to this support here. We've got the lows around 65.58. Now, to me, I was sort of expecting that. I was expecting that to get washed out, but I think this trend will hold because of the way it was acting last night. You've got the market bounced up. This is after hours, so this is a European session. By the time the US opened, it was somewhere around 11:30, might have been around here. And the market, don't forget, the US actually went down. We were holding up okay. We were holding a bid, as in buyers were happy to sit there and buy it up. And sellers weren't willing to get out. So that's when the US is starting to back off slowly, and they ended up down. I think the Dow was about 100 points down or so. Our market was holding up quite well, and we ended up up after a positive day yesterday. So we had this gap down on the open, gap down to the lows, reacted back off. It's come back down and retested 65.09 during the day, and then started to rally into the close, held up well into the close, and then once it opened, it chopped around obviously the start of the European session, and then started to lift again as Europe lifted. But it's held on to those gains, so it's taken off to the upside, expanded to the upside, which in a strong market you expect that. And in a buoyant market, you don't expect to pull back very much, which it didn't. It's held its ground quite well. So that 65.58, expected that to get washed on the open, but it just depends. This support zone's come in play, and so it'd be interesting to see how negative we get today, whether we do get negative or whether we just have to grind around and hold, hold this trend up. Longer term, this could easily be a lower high. Don't forget. So we've got the markets pressed down, we're grinding back up. So this sort of action, you've got to take note of what is actually happening. So you've got the markets moved down, and the way it expanded down was quite savage. This press down here, this minor small bounce, expansion down, a little bit of chop over quite a few days. And then when we give up the ground, it's over the period of this is only a 30-minute chart, sorry. It's over the period of just a few candles, and it can really accelerate. So the acceleration, the strong moves are down. This move here, completely capitulated, bang. And then it started, getting soaked up, but it's already dropped quite a bit. But now, this kind of action doesn't lead me to believe it's too strong longer term. But I mean, we could just keep grinding higher. Again, it's all just got to do with what news is coming out. It's not, the market's looking great, because it's not. I mean, we're dropping rates. Europe's dropping rates. US is dropping rates. It's not a good sign. And you only drop rates on a cooling economy. When you've got a cooling economy, you shouldn't be so buoyant for the future. But of course, you're going to get you get markets chop around. on different time frames, short, long, medium, all that sort of thing. So there's going to be chop no matter what. So this sort of thing, when you expand lower, and then we've contracted back up, we could get a retest lower. We might build a lower high, but I'm sort of biased down, not just today, but more over the medium term, or the short to medium term, biased down. But I don't know if it's just drop like a stone again, straight through 64.25 lows, or whether we start getting at some support stepping in, or some buyers starting to step in at these sort of prices. Once we have that, you correct this sort of move, you get a higher low, and that would lead me to think that it's going to be expansion back up again and probably test back right up to the highs potentially. So that's your longer term view. For today, just go to the here we go, trading charts there, if we can get them up. Yeah, it'd be interesting to see whether we chop around here, hold a bit again, and hold this trend. And if we don't, if we go straight down through here now at 65.58, or even the lows just from before at 57, we could jam through, and then you've got all these longs built up. The trend is up, higher lows. That crack of this sort of support zone, this rising support, would mean that they're probably going to start flushing out a few of the longs that have been building up, which could be a decent move down. So we'll just have to wait and see how that plays out. But that you would expect off. I would expect, if that sort of thing happens, you might get it to here, start to build, and then boom, and then get that expansion down during the day. That's on a 5-minute chart as well. So that's what I would expect. I would expect a bit of a chop. You get these buyers starting to step in off support. They're expecting, okay, we're buoyant, da-da-da. And sellers just sitting on in wait, I guess, and then start to pressure them. And once you get enough buyers that they built up here, maybe built up here, they've been building up through this sort of move, holding, and then you've got all the buyers lined up as fuel, previous buyers are sitting on profits potentially. If you get them sucked in and then starting to get squeezed out, they're going to have to sell back to market, and the market could just drop. That's what I'd be looking for shorts. If not, I'd be looking for, say, just the reverse of this. Market probably come down and retest and start to hold inside levels, and then sort of that move back up to these highs, previous highs that you see before. We'll see. So that's it. We've got the ASX, like we're saying, expecting to be open up around 25 points. It's up 7 at the moment. We're 4 past 10, so a few more points to put on before the open. Again, this ASX, this is the daily chart. On the ASX, you got the highs, capitulated off the highs, trade down to 64. We built a bid again, a bid zone, started to lift, and then we failed off a lower high. So this is the issue at the moment, whether this is going to hold a higher low. So what you could just get is this longer term point of agreement, rising higher lows, falling lower highs. So the market's coming to that point of agreement before we get expansion one way or the other. But at the moment, if we run out of steam here, just like we described on the SPY, this thing could roll over and start attacking 64 and below. Again, it's all going to be news driven. I would suggest it's going to be what's happening with trade, and that's sort of the major factor everyone's looking at the moment in the US. So it's 5 past. Let's just look at what played out yesterday. So this was the action from yesterday. Open, push down. That was that low we just put on the charts before. I'll show you in a minute. Popped up and then started to fade in here. But this is a 30-minute chart. So you got this candle, red candle, another red candle, another red candle. So it's heading south. You got momentum basically down, heading down. So you want to be on the sell side. If we go down to the next chart, this was the trade. So it was basically that push down, then you got a push back up, try to close the gap, and then start to fail. So once you got this candle and then just grind back up. So this is what we're talking about, the grind. You got expansion down. It's quite clear with a quite hard and fast candle. So when you get that sort of thing on the upside, that sort of expansion on the upside, to show that there's buyers willing to jump in. Okay, they take a bit of a breath, sellers come in, and then they do it again. So once you've got this secondary green candle, you're probably going to be biased long in the short term, and your risk is just below this higher low, and just see where it goes to. You could look to close the gap. It failed, stalled up here, and then you got that expansion candle. So it's starting, buyers are running out of steam. There's limited buyers even to push it up. Sellers starting to jump back in at this level, and then you can see they start to outweigh the buyers and press it down. You got this bit of a grind with a couple of candles, even rejecting. It was trying to get bought up, but then sellers are stepping in at a lower level and starting to pry it lower, because they know that's probably a bit of buyers from this level built up, even previous, overnight buyers built up, they can squeeze out, and that's where it took the short. But it was a grind down here. I think we got done. I took it off here, 17. It was only 6 points. It did go lower, and I think the stop would have been 1 point lower in hindsight. I just didn't like that action. It was really grindy. And you can see it was just grinding lower, and I thought if it's going to fall short, it could fall short somewhere around this high low if it's going to be buoyant, but instead it went down and tested the low. And then after that, it was basically just all buying into the close. And you can see this really good move up. So I didn't get a hold of that, which was a shame, but I didn't really see a clear setup from my, because you still got the 30-minute chart, which was at that stage, that was just sort of, it was still momentum down, below zero's down for me, above zero's up. So when momentum's still down on the 30, there's a chance it could just roll over and just keep pushing lower. So that's why I would have found it hard to get in that low. The only good thing was that test low, retest and failure. So you're taking it more on not so much the 30-minute chart. Momentum's gone to the upside on the 5. And you got that retest fail, we say, or double bottom. We call it a retest fail. So when it goes down, hits a level, reacts back off, showing that buying support there, comes back in to retest it, can't press through, and fails for a second time. It's essentially going to be targeting up towards these highs. And you just got to look for an entry after that, maybe a shoulder, like we always say, that pullback, a little high, minor inside high low, and then it goes. That didn't play out, so it's really just a candle formation taken off this level, this high. Once that's broken, you know that, okay, we've pretty much confirmed that double bottom and away you go. But I find that, for me, I don't like that sort of entry as much as what I could. But anyway, it played out beautifully. I thought I'd show you that. That's the action from yesterday. We're only up in 12 at the moment, so let's just see what happens. Let's just give it a couple of minutes, see what happens at 10 past, and then we'll call it quits there. We'll just see what the SPY's doing. SPY's still holding. Nothing too flash. Has anyone got anything they want to have a quick look at? Nothing much happening at the moment. At 12 points, so it might open a little bit flatter than what you expect. Not your 25 points. And what's going to happen is now that we've gone to daylight savings, I think the sessions, I think we close, I'm not sure, I have to check on the times again. Generally, the US closing before us, the SPY. Now it's, well, there you go, 23 points. So it has opened up in line where we expected. Well, it's going to anyway around the 25 point mark. So when daylight savings changes over, I'm not sure when the SPY, I think it's still closed at 7 a.m. and the US markets might close just that or after. 7:38, I think, once they flick over as well, which means that there could be some action in the last half an hour that the SPY misses and it has to readjust. So it's going to be a bit tougher, a bit more complex just to look at what you expect on the open. All right, guys, so it looks like it is opening up. So just keep an eye on what's happening later on. It could be a bit of a bounce and then flush, clean out some of those longs, and then proceed to head lower. This sort of action, hopefully not. Hopefully we hold this zone at least for another day or so. But I think holding that will obviously be dependent on news and trade war news and what's happening there. All right, thanks for joining me. Remember to join us on TradeView, and we'll have a few bits and pieces we'll be posting there. And if you get the alerts, there was one alert I've just got my eye on at the moment, which we'll probably send out in a minute. I haven't looked at it yet, but we'll have a look at it in a second. Thanks for joining me. We'll speak to you again tomorrow. Cheers, guys. Bye.